Hey y'all, it's Mason Blaisdell and wanted to make a quick video. We are halfway through November now, which is already crazy. I don't know where this year went. But wanted to give you guys a little update over what in the world is going on in the Austin real estate market, what we're seeing, all these changes, and as we wind down towards the end of the year too, a lot generally changes in real estate. People get traveling for Thanksgiving, they're going out for the holidays, Christmas is coming up very soon. And anyhow, just kind of want to give you guys a feel for what's going on, as this is something I do obviously every day. And biggest one too I want to talk about is updates in interest rates. Obviously those dropped last week. We're seeing a lot of changes because of those and just changes in the market in general, affordability, and to be honest, it's a little bit of a light at the end of the tunnel. Hopefully this recessionary period in real estate is a little bit more controlled and predictable than we were initially expecting. But anyhow, let's jump right in. And so last Thursday, we saw a rate drop in interest rates. The consumer price index came out, obviously one of the metrics that the Fed uses when they're putting out these interest rates, and inflation came back a little bit lower than expected year over year. If you're curious, the statistic came out 7.9% year over year inflation, which is lower than the 8.2 to 8.4% range that they were anticipating. So it's not like it's world ending, but it's positive, and it definitely made an effect, to the same day, in interest rates for mortgages. And dropping 0.5% can make a $150, $200 difference really easily in a monthly payment. And obviously that it all works out for good. That covers car insurance for most people. So anyhow, definitely an interesting metric. We will see how it continues to affect the real estate market, but either way, it makes it a little bit more predictable. And I think that's a trend that's going to be good. These are obviously very expensive assets. Most of the people I know that are going to watch this own a home or are really considering it. We want to make sure that our investment is protected. So I definitely think it's a good thing and hopefully continues to stabilize out the market. Next, posted some statistics now that everything should be reported for October. And I actually want to show you this. I'm going to show you on my computer screen here in a second. But these statistics for October, the market volume is quite significantly down, 30 to 40% for transaction volume. We're down just over 2,400 homes sold in October compared to about 3,500 homes sold in October of 2021. A little bit of that is normal. 2021 really was an outlier as far as years go, but winding down towards the end of the year, it's a little bit more typical, just not normally that sharp of a decrease. We also saw average close price come out at $580,000. That is for the entire Austin metro, not just Austin proper, which is pretty significantly down. In June of this year, 2022, that average sales price was $645,000. So if you're curious, like how much the interest rates have affected and just the economy in general have affected real estate, that's probably the best metric I can give you. One interesting statistic though to look at is rentals. I know a lot of my clients that are going to see this do have investment properties. Investments have almost remained unchanged. These rental statistics, the days on market, the rent rates, are just about the same as they were in 2020, 2021, 2022. They've gradually increased, with of course the rising cost of things around, but it hasn't affected the average days on market or rental desirability at all. Still, 1,900 homes are listed in the Austin MLS for rent that are being rented in the last 30 days. And that is really, really strong. And of course, you can use that discrepancy. Current average days on market for a home for sale is in Travis County 123, compared to for rent is 41. It makes a massive difference. And that discrepancy is a good opportunity for investors. If you've been thinking about it, it could be a really good time. Buyer competition has not been lower for a long time. So it could be an interesting one to get into the market. And kind of my last thing I wanted to talk about today was, as we get towards the end of the year, if you have been thinking about a new build, whether it's for yourself or for an investment purpose, These builders are giving crazy deals right now. Just this week, I negotiated $40,000 off for a primary buyer from only a $350,000 house. So a huge chunk of money. Also negotiated $30,000 the week prior for an investor looking at a new build, up in Georgetown. If you're thinking about an investment home as a new build, or if you're thinking for a new build for yourself, there are some really good deals. These builders want to get the homes off the books. They're paying for rate buy downs if monthly payment is the holdup. They're paying for closing costs, or reducing prices. All of these things are really good. I will be the first to admit I am not a realtor that's going to get up here and say, oh, you date the rate and such, refinance later. I can't tell you if you can refinance in 1 or 2 years. Like, I don't know if rates are going to drop that. I'm not a clairvoyant. However, if closing costs is a holdup, getting a good deal, all these things, like, now is a really good chance these builders want to get their homes off the books by the end of the year. Anyhow, I hope all this was really insightful. I hope you learned something in it. If you want to chat further, you can always message me back. I'd be very happy to chat with you. Have a great Thanksgiving. Stay warm out there, and I will talk to you all very soon.